Clifford Bennett, Hurston Economics. As the week draws to a close, there's a lot of hesitation. There's certainly a lot of anxiety in Egypt over President Mubarak's speech, which was an attempt really at passing power on, but saving face at the same time. I think he's got the balance a little bit wrong in that he's tried too hard to save face, and he wasn't punchy enough in his delivering of the line that he would pass powers to his vice president. But then again, it is his vice president. So what can happen in Egypt over the next 3, 6, 12, 24 hours? Anyone's guess. My guess would be that if the crowd continues to be unhappy with that speech, then the military will take control of Egypt, I would suggest, with a very sort of sped up time frame for elections. That's probably the most likely outcome. Otherwise, they could be looking at quite significant civil unrest. What does this mean for financial markets? I think financial markets now know that this upheaval in Egypt doesn't slow the economies of China or any other economy in Asia. It doesn't slow the economies of Latin America. That's where global growth's coming from. That's where the demand for commodities is coming from. It probably doesn't even affect Europe. If it's going to affect anywhere, it'll affect Europe, but not to any great degree. The United States unaffected. These economies are coming up back on the strong side as well. So nothing changes in the outlook. Unfortunate that the speech didn't clear the air as well as it could have. In terms of market hesitation I think is more about just consolidating the recent strong gains that we've seen in equity markets. There's a bit of a broad-based sell-off because of Cisco's earnings report. You know, they're sort of giving an earnings caution. The point to be made out of that is that part of that caution comes from the fact that Cisco's experiencing far greater competition. In other words, the global economy is so strong that there's a lot of countries out there competing with Cisco. That's going to affect its earnings. But it doesn't mean, you know, sort of 5 years ago, if Cisco said that, then you'd be worried about the economy. No, this means the economy is incredibly vibrant elsewhere in the world, not just the United States, which is why their earnings are threatened by competition from overseas companies, if not from within America. The American firms that are very domestic based are reporting earnings above expectations. It's only the 1 or 2 multinationals who have real global competition that really need to lift their game. That's because they're 2 years behind the game. When the rest of the world was already partying, the United States was still myopically focused on the negative, expecting a double dip recession. They didn't invest in new equipment. They didn't invest in new people. They've lost market share, and now they're paying the price. That's why I think US corporate executives are really going to come back on the strong foot over the next 6 months. You're going to see a tremendously strong acceleration in investment and hiring, perhaps. The US economy is going to take off in the next 6 months as it tries to reinvest to catch up with the rest of the world. So the outlook, gold, oil look fantastic. US dollar, bit of consolidation. It's going to resume its downtrend next week. Gold, oil look really, really good. Can't say enough to keep buying those. Australian dollar could dip a little further, but again, it's a tremendous buy still. Thank you.